I think it's just vapor.
Vaping is safer than smoking, isn't it?
One vape pod has as much nicotine as one pack of cigarettes. Get your head out of the cloud. Talk to your kid about vaping. Visit talkaboutvaping.org. Brought to you by the American Lung Association and the Ad Council.
You're listening to Numbers by Barron's. It's Tuesday, July 13th. I'm Nick Jasinski, and I'm here with the numbers you need to navigate the markets this morning. Our first number is 22%. That's how much an index of S&P 500 bank stocks has returned since the start of the year. It's about 5 points ahead of the index as a whole. Thanks for that outperformance in 2021 go to banks leveraged to the economic recovery and slightly higher interest rates. As they do every 3 months, banks kick off this quarter's earnings season, which begins today in earnest. JP Morgan Chase and Goldman Sachs are this morning's highlights, followed by Bank of America, Wells Fargo, and Citigroup tomorrow, and Morgan Stanley on Thursday. It's likely to have been a strong second quarter for the banks, especially when compared with last year's pandemic-depressed earnings. But investors are always looking to what comes next, and the best news may already be in the rearview mirror. The next number up is 547%. That's how much earnings of S&P 500 industrial companies are forecast to have risen in the second quarter, compared with the same period last year. It's the fastest growth expected from any of the index's 11 sectors. That has as much to do with last year as it does with this year. Industrials, like automakers, manufacturers, and airlines, saw their sales and earnings plummet last spring as the COVID-19 pandemic and associated lockdowns forced many to pause operations. Now, with a global recovery underway, it's easy to post numbers well above the year-ago period. But there's still more room to rebound. Analyst consensus is for industrial sales and profits to remain below 2019's second quarter this earnings season. Our last number is 16%. That's how much an index of U.S. airline stocks has declined over the past 4 months. That comes after the index more than tripled from its COVID sell-off bottom in March 2020 through March of this year. While the broader economy is quickly recovering, airlines still aren't likely to see a blowout earnings season. Domestic travel is returning to pre-pandemic levels, but that's not where the major airlines make most of their money in normal times. Premium, long-haul international travel is the most profitable business for airlines, and that remains heavily depressed. Travel restrictions remain in place in many countries, and new COVID variant outbreaks in several regions are delaying a full rebound. Plus, the cost of jet fuel has spiked alongside oil prices in recent months, and that's a negative for airlines' profit margins. And that's Numbers by Barron's for Tuesday, July 13th. I'm Nick Jasinski, and we'll be back with more numbers you need to know tomorrow. Have a nice day.